our topic for today is the development and modernization of banking system, in Lagos. So it is the development and modernization of Lagos as a banking and financial place, from 1860 to 1960, basically. So we want to see how Lagos actually evolved into what we are now experiencing in terms of being a center of economic activities, especially with regards to financial institutions. So how did Lagos evolve, all right, from a small city characterized with fishing, and even agricultural activities like pepper, all right, into what is now the center of gravity of financial and banking system in Nigeria. All right, so this is our preoccupation today. And before I do that, I will first try to lay a foundation to giving you a broad knowledge of the historical development of financial systems and banking activities in Lagos. All right, so modern banking and financial activities, financial infrastructure were rapidly established in the former colony of Lagos as soon as the British and other Europeans, especially the merchants, were developing their commercial exchanges in Lagos. All right, the development of commodity trade, all right, with the indigenous population actually necessitated the need for a viable and a more standardized means of exchange, all right, and a viable financial institution. So from that point onward, all the territories composing southern Nigeria were monetized before what became known as Nigeria was actually created. Okay, so from the creation of Nigeria, Lagos also remained the focal point for the development of financial systems and banking system in Nigeria. These are some of the key things we'll be looking at. The role, especially we'll be looking at the roles played by European merchants and other business groups, who actually contributed to the development of modern banking system in Lagos. Colonial policies, how did colonial policies and regulations shape the evolution of financial system and banking system? All right, so I'll say that two important epochs or period or episode, that is from 1880 and 1960, are quite significant in our understanding of the development of modern banking system in Lagos. All right, so the year 1880 is the year of the Ordinance Number 2, imposing the British sterling as legal tender in Lagos, which is a key medium for the British colonial authorities to impose their views and their regulations on the development of colonial banking in the colony of Lagos. And subsequently, in the territory of southern Nigeria, these mechanisms were also adopted in what became known as Nigeria, the larger Nigeria in the 20th century. All right, so we'll look at how the initiatives of colonial policies actually transform the economic landscape, especially shaping the development of banking and financial activities in Lagos. All right, are we making sense? I think before we would for us to appreciate how the development of banking system started, it is very germane that we also have a very broad understanding of the nature of traditional or indigenous banking system in Lagos, before the advent of banking, British pounds and financial system. It is important to note at this juncture that during the pre-colonial period, about 75 to 80% of Lagos trade was centered, all right, was conducted by the barter system. About 75 to 80% of Lagos trade during the pre-colonial period was conducted by barter system. Barter system meaning that this was a system in which commodities and goods were exchanged based on principle of mutually allowed arrangements. all right, the exchange of commodities, all right, among people. You supply yam, and you exchange, you obtain palm oil, for instance, in return for that. And that was a system. So this was rather a clumsy arrangement, a clumsy system, as African produce trader brought in their oil by canoe, by air portage, and they obtain other commodities, and they had little opportunity under this system to determine or refuse the prices of their commodities. All right, so the barter system had a lot of limitations. Even though it was quite seamless, it made commercial activities quite seamless for the people of Lagos. The prices were dictated by the middlemen, all right, or the European manufacturers, for their goods also. And it is also important to know that before the introduction of modern banking system, there were a number of traditional financial institutions, in Lagos, traditional banking systems in Lagos, and we will look at all of these one after the other. Banking system in the pre-colonial period, where banking practices were conducted on the basis of existing mode of exchange, as I've mentioned, the barter system. Okay, this was a means through which commercial activities were carried out during this period. Savings were made through the traditional currencies, all right, which included but not limited to barter, the barter system we talk about, the use of cowries, the use of gold, strips of clothes, and vital agricultural products. These were some of the key elements or components of the traditional exchange system. These currencies were used to determine the exchange rate, interest rate, and value of capital deposits. All right, so the clothes or the strips of clothes, the iron bars, the salt, the gold, and the cowries, all of these had distinct economic or capital value in pre-colonial markets. All right, so specifically cowries among these other articles of trade played a significant role in the operations of traditional banking system in Lagos. Although the barter system predated other forms of savings and exchange in pre-colonial Lagos, but the advent of cowries, especially cowrie shell, transformed the pre-colonial banking system in Lagos. Okay, other articles such as clay pots, hose, cutlasses, gari, yam flour, dried fish, smoked fish of different types, all right, meat also equally served as dominant means of exchange among the people of Lagos. All right, coupled with the other commodities such as gin, rum, mirror, clothes. All these had significant impact on pre-colonial financial system in Lagos. It is also important to note that before the influx of European conquistadors, Lagos traders, like several Yoruba communities, had benefited immensely from the operations reliable capital markets, savings and credit institutions, and money economy. All right, so such that in the pre-colonial period, especially among the Yorubas, there were a number of ways in which traditional banking services, especially money lending, were conducted. All right, so even though there were no institutionalized banking system or structures like the Guarantee Bank you have today, or the Zenith Bank, or the Oceanic Bank, Access Bank, all right, in the pre-colonial period, but there were institutionalized means of conducting exchanges, capitalization of resources, all right, and goods existed among the Yoruba. There were a number of ways in which the indigenous banking services functioned. There were rotating savings and credit association, for instance, which is popularly known as the Esusu, all right, which gave interest-free loans to members. It is Esusu, all right, a rotational savings and credit association. What is akin to what is now prevalent in many market or many working environment, the cooperative society. All right, this was a dominant system, banking, among the pre-colonial people of Lagos. People came together, pull, their contributions together, on a principle of agreed by the people, all right, of rotation. So as several scholars such as Akomu Adebayo and A.G. Hopkins have divided the traditional banking and monetary lending system among the Yoruba into three parts, and I will categorize them one after the other before we move into the modern banking system. All right, so the first is the system of pledging crops as collateral and as interest. All right, so under this system, individuals who needed loans, all right, or credit facilities would approach, all right, an association or locally accredited money lenders, all right, who provided some credits, all right, to the person on the condition that the borrower will have to pledge his crops, maybe his farm, a portion of his farmland or crops as collateral, as interest. The second is the Iwofa system, Iwofa PON, all right, PAWN. Iwofa system where the borrower paid the interest in labor supplied on the creditor's farms or industry. All right, in this context, a borrower would collect or obtain a loan from a creditor, all right, on the basis that the repayment will be done through providing services or depositing one of his child or relatives or the borrower himself, after borrowing the money, going to the lenders or the creditor's farm or industry to provide some services, all right, kind of labor, all right, providing some labor, all right, through which the loans will be offset. The third is the Sogundogoji system, Sogundogoji, under which the interest on loans was paid in cash, which was at the very least an amount equal to the equal. Sogundogoji, all right, it is easily translated. What is Ogun? Ogun in Yoruba is 20, all right. Ogoji is 40. Turning 20 to 40. That is a simple connotation of Sogundogoji. All right. So credit among the Yoruba, according to A.G. Adebayo, involved more than the lender and the borrower. In all the cases, there were also a guarantor. In this context, of Sogundogoji, there was also a guarantor, and Onigbowo, or a familiar to both parties, and capable of speaking for the borrowers and assuming the responsibility for the repayment if the borrowers defaulted. All right, it was a standard. You can see the structure. It was an organized society. These Onigbowo, all right, for instance, are usually respected and trusted people, by the lenders, who actually, guarantee that whatever amount taken from the lender will be repaid, all right, through the instrumentality of the guarantor, Onigbowo, all right, and who also serve as the intermediary between the borrower and the lender. So in many cases, the Onigbowo was not very familiar to the borrower most times in pre-colonial society, but was only doing the duty for a fee, which was usually deducted from the principal's amount, from the principal amount received by the borrower, upfront. And this was a very, very good structure. Moreover, the lender knew that the responsibility for the recovery of the money, was theirs and not that of the Onigbowo, if he was unwilling to help. So at the principal trade centers, in major markets, a commercial capital market, performed the unique function of promoting local and regional trade among the people. Such credit institutions existed and fostered closer relationship between debtors and creditors, on the other hand, and from various angle. All right. So at the major trade center, in Lagos, for instance, there were specialized bankers and money lenders, who were patronized by merchants, by traders. All right. These specialized money lenders and even money changers, they had strong and broad knowledge of the dynamics or the vagaries of global currency. All right, they knew the value of a bar of salt or tubers of yam in relation to 100 or 50,000 calories. All right, they knew the value of one commodity to the other. And some of them played the roles of money lender, savings collector, and money changers. So in a way, colonial capitalism, it was colonial capitalism or the advent of colonial rule that actually brought about the introduction of European currency as a medium of exchange in Lagos. So suffice to say that before the annexation of Lagos in 1861, all right, the principal mode of exchange among the people of Lagos was the barter system, and also the various means of exchange, the cowries, the gold, the manillas, all right, the iron rod, the strip of clothes, and also there were also institutionalized means, all right, of borrowing money, a susu, as I've mentioned, and there were accredited money lenders and money changers in the nooks and crannies of Lagos, all right, as we have mentioned. So in Lagos, the development of modern financial system started much more in the late 19th century, as I'm going to demonstrate shortly. The pound sterling and shilling soon replaced the traditional medium of exchange. With the development of the legitimate trade, for instance, the abolition of the slave trade actually made obsolete trade in human beings, all right, in slaves, and this actually led to the inauguration of the commodity produce trade in palm oil, palm kernel, rubber, cocoa, all right, and other agricultural commodity, all right, which were exported. So the reconfiguration of the economy of Lagos, all right, from slavery into the commodity produce trade necessitated the need for a standardized, a conventional means of exchange among the people of Lagos. And this was what led to the introduction of the pounds and shilling, which replaced the traditional means of exchange in Lagos. Are you still following me, please? Are we still together?
Yes, sir.
Yes, all right. Yes, sir. All right. So I said that the pounds was the introduction of the pounds and shilling, the European pounds, was a precursor to the development of modern financial institution in Lagos. The development of cash crop economy also facilitated the need for standardized means of exchange. All right. The introduction, of course, this was actually encouraged by a number of developments in Lagos. All right, apart from the fact that the legitimate trade had been instituted, the introduction of steamships in the trade between Europe and West Africa in the 1850s also created the atmosphere for the development of palm oil in Lagos. And from 1850s onward, also the relative peace in Lagos encouraged the growth of several European goods. All right, European merchants were bringing in foreign goods, gin, clothes, and all the stuffs, and were exchanging them with palm oil and the likes. And in the 1850s, by 1850s, there were quite a number of foreign firms which operated in Lagos. The London firms of Thomas Oates and Company was one of the key European mercantile firm which took steps towards opening up palm oil produce trade in Lagos. And this was followed by other European trading firms which established their factories or trade stations along the shores of Lagos and the lagoon and the harbors. Some other European trading companies of the period include the Royal Niger Company, all right, the RNC, the Royal Niger Company, which later changed its name to the United African Company, the UAC. There was the AG Leventis and others. These were some of the dominant business interests or groups that influenced, all right, the development of banking and financial institutions in Lagos. So the as trade grew, rapidly in importance, all right, it was necessary for banking, a more conventional means of exchange, payment, to be introduced. All right, and also it was not only the European firms and merchants that actually facilitated the introduction of conventional banking system. Prominent African merchants, of the period, such as Mr. R.B. Blaze, C.J. George, J.O. George, J.J. Williams, Mohammed Shita Bey, J.S. Lay, and R.A. Wright. These were some of the prominent, indigenous, and of course the returnee slaves who deployed their relatively scarce, resources, economic resources, in the legitimate trade, in the commodity produce activities. And the commercial community in Lagos during this period, actually, also boosted the development, welcomed this development. All right. So at this juncture, I would move swiftly into the development of modern banking system in Lagos. As I've noted during my introduction, that it was two epochs, two episodes or periods are actually significant, all right, in the development of financial institutions in Lagos. All right, this was, I mentioned 1880 and 1960. All right, this was the period. This was the period where the several financial institutions emerged in Lagos. In 1880, the Colonial of Lagos was part of the Colonial of the Gold Coast. All right, I think we have established that in our HSS 121 in 100 level. But no tangible financial institutions was operating in the Colonial of Lagos, although it was established by the colonial authorities that the legal tender was the British sterling, with some Spanish, American, and French coin cowries before the period. All right, so the latter was employed. The pounds, for instance, was employed as a major means of exchange following the inauguration of colonial capitalism in Lagos. A critical appraiser of colonial record had actually shown that no banknote was in circulation, and no private bank was established by foreign firms before the annexation of Lagos. All right. So while the trading of soft commodities business was expanding, all right, in the especially with the development of the hinterland of the Colonial of Lagos, and also the growing development of palm oil, the territories of Lagos received large influx of capital needed to develop the financial services in Lagos. Basic banking infrastructure, we can say, were not in place, all right, and all these business activities could not develop steadily to support external demand of soft commodities before the introduction of banking system. But it was only in 1887 that a government saving bank was first established under the management of the colonial treasury. All right, so please note the first efforts attempts to introduce a conventional, a formal banking system was in 1887, January 1, 1887, where a government saving bank was established, all right, under the management of the colonial treasury. All right, so it is not basically certain what types of banking services and products were offered by this government savings bank. All right, however, what is sure is that financial system introduced during this period with this initiative served primarily the interests of the colonial government and those of the civil servant present in the colony. So suffice to say that other elements, other interest groups, business interests, the African merchants didn't have much opportunities to interact with this or to engage with this banking infrastructure created. Only government, those working with the government, civil servants, administrators, and a few European merchants. All right, so European banking and credit facility were provided in these systems, to foreign merchants to allow them to also purchase, raw materials and commodities, from the indigenous population. So that means, in one of our courses, I spoke about the racialization of the colonial state. All right, the colonial state in Lagos was highly racialized. Most of the policies, introduced by the colonial administration, by the colonial government, were centered, all right, were geared towards favoring a particular group, all right, over the other, especially the European business interests, the expatriates also. So as the necessity grew, and as the need to organize the colony of Lagos as an independent colony, from the Gold Coast colony, grew, there were also a rising demand, for a better and a more organized and highly centralized system of exchange, especially the circulation of money, in a way to ensure that there is uniformity in the medium of payment, and other transactions. So by the end of December of 1808, the government saving bank was managed directly. This government savings bank of 1887 that I mentioned, came under the influence, of the post office. All right, the government, post office managed, the government savings bank. All right, which accounted for about 3,104 depositors at the time, with about 33,813 pounds, to the credit, out of which, about 6 million people, out of the about 6 million people. All right, so this was the structure of this, banking facility at, the beginning of the 20th century. All right, so what I said is that by 1908, the government savings, bank, which you've mentioned, of 1887, was, given to the post office, all right, to manage. All right, and at this period, it had 3,104 depositor, all right, with a total amount of 33,813 pounds. All right, so this 3,104 was just, a little percent of the 6.5 million of people, in the entire southern Nigeria, basically, because people from the interior, interland, also came to Lagos to, to participate in this banking, infrastructure, to benefit from this banking infrastructure. So the increased circulation of money was driven subsequently by the merchants and the expansion of the cocoa trade and the palm oil, trade. But there was also the obligation to get rid of commodity monies and also to enforce the British sterlings. So the need to eradicate the barter system, the idea that you bring your palm oil and exchange it for gin or for textile, with the European, was something that was quite becoming an anachronism, and quite redundant. So it was necessary for a unified, system of exchange, the British sterling coins, all right, or pounds, be introduced. So from the colonial office list and statistical blue book, all right, which is a record, it is arguable that during 1881, a branch of the African Banking Company was established in Lagos, all right, so which eventually merged into a company named the Bank of British West Africa. This was perhaps one of the most laudable, the most significant episode in the development of banking facilities in Lagos. The first bank in Lagos subsequently was opened by Mr. G.W. Neville, Neville, in 1891. The first Bank of Nigeria was established by Mr. G.W. Neville in 1891, and this bank later became the Treasury Savings Bank. Subsequently, it transformed into what was known as the Treasury Savings Bank, which on the attainment of independence was changed to the Bank of West Africa. And I think subsequently later in the post-colonial period, it became the Standard Bank of West Africa. All right, by 1908, the Bank of Nigeria Limited, with its central office in Lagos, was also established. Another bank was established, the Bank of Nigeria Limited, with its central office in Lagos, all right, and with branches in Burutu, in Calabar, in Onitsha, all right, also take its own route. The Bank of British West Africa, perhaps at the period in the early 20th century, was at the center of the circulation of the British West African sterling. All right, just as you have the CBN today, which disburse all the current, all the legal tender, all right, the naira, all right, to all the banks, all right, to from the CBN, that all the naira, 1,000 naira, 500 are circulated to all the commercial banks. So the British Bank of British West Africa was responsible for the circulation of African sterling, to replace the use of British sterling in British West Africa, and to make financial transaction more efficient, and to reassert its monetary sovereignty over the colonies. This was a very draconian measures taken by the colonial authorities to make sure that all its colonies in West Africa had a standardized, a conventional, and a uniform means of transaction or exchange. So these processes and circumstances that ushered or necessitated the development of indigenous banking, all right, was consolidated particularly in 1917 with the formation of the National Congress of British West Africa, all right, in 1917, with the formation of the National Congress of British West Africa under the leadership of Cecily Efford, a Gold Coast, that is Ghanaian lawyer, and R.A. Savage. These were some of the radical figures that actually organized a strategy that actually led to the development of indigenous. I told you that the other banking infrastructure that were introduced were centered on the European business interests, the European merchants, the producers, European traders, and other elite people in Lagos. So there were no viable financial infrastructure for the growing African commercial interests in Lagos, such as the palm oil cocoa traders, all right, the merchants, local or indigenous business groups in Lagos. The policies introduced by the colonial authorities didn't allow most of these people to benefit from the colonial financial institutions. And of course, it was through the effort of these two African Pan-Africanists, all right, a Ghanaian lawyer, and a Nigerian, that the first indigenous bank was created, the National Congress of British West Africa. All right, and by 1920, the association, all right, took steps to clamor for the establishment of corporations, other indigenous corporations, all right, and initiatives that would constitute the British West African Cooperative Association. All right, I told you that under the traditional system of savings, there was the indigenous Esusu system of cooperative arrangement. All right, so these were the initiatives that were actually modernized, all right, with the association founded by Cecily Efford and R.A. Savage. All right, and the idea was to establish indigenous banks, all right, among other economic imperatives. Indigenous banks that will be operated, or that will be managed by Africans, basically in the interest of Africans. All right, so the establishment of indigenous banks, all right, was also due to the failure of colonial banks to satisfy the credit needs of the African business community in Lagos. All right, especially in terms of provision of loans, utilities, and guarantees. All right, capital for the burgeoning business groups in Lagos. From 1929 onward, a number of indigenous banks developed in Lagos. All right, and subsequently, they spread to other parts of Nigeria due primarily to the yearnings of African nationalists, the activists, and indigenous business interests. So, what were the structure? What were the major characteristics of these indigenous banks, and what function, what role did they play in encouraging or facilitating seamless access to loans, savings, and investments in Lagos. Okay, so indigenous banks in Lagos function side by side with the foreign banks. That is the first point we have to note. These indigenous banks function with side by side with the Europeans. So it was understandable for European communities, the European business interests, to patronize the government banks, the colonial government bank, and all the stuff. So Africans also patronized, put their weight behind the indigenous banks that emerged in colonial Lagos. And in this context, so this made them to be more capital viable, and it gave them more economic autonomy. So this indigenous bank enjoyed at the onset economic autonomy. They had the viable capital, particularly the facilitation of required financial support to boost the indigenous capital market. And of course, subsequently, they became crippled also by colonial regulations and policies, by the perception by the business group in the colony that colonial banks were established to champion the cause of the Nigerian economic freedom from the hold of colonial capitalism, also encourage the British particularly to attempt to strangulate some of these local initiatives. But what is important is that from the 1920s and 1940s and up to 1960, all right, several indigenous banks emerged in Lagos. That was why I said two epochs are quite significant in the history of banking and financial system. The 1880, all right, when the first colonial financial system was introduced, and 1950s and 60s, where they became quite ubiquitous and widespread in Lagos. In 1929, for instance, the first bank, all right, the indigenous and commercial bank, was set up with a share capital of £100,000, all right, in 1929. The first bank was set up in 1929, which is a laudable initiative. Subsequently, other indigenous banks came on board. The Nigerian Mercantile Bank came up in 1931. The Nigerian Mercantile Bank came up in 1931, and it was followed by the National Bank of Nigeria, 1933. By 1945, you have the Agbomade. The Agbomade Bank was established, and the Nigerian Penny Bank, respectively, came up in 1943. With the creation of statutory agricultural commodity boards, all right, especially in 1947, thereabout, for cocoa, for palm oil, palm kernel, all right, the Nigerian farmers and the commercial banks were established. The Nigerian banks the Nigerian farmers and commercial banks were established, all right. So this was a banking infrastructure developed basically in the interest of the Nigerian cocoa palm oil farmers. By 1950, Lagos experienced a radical increase, all right, in the number of banks and financial institutions in the city. 1950s witnessed massive proliferation of indigenous banks, not only in Lagos but also in the entire country, but with their capital and head offices in Lagos. For instance, the Pan Nigerian Bank, emerged in 1951, and although it collapsed later in 1954, all right. In the same year, 1951, the Standard Bank of Nigeria was established in 1951, and in the same year also, towards the end of the year, you have the Premier Bank in 1951. You have the Nigerian Trust Bank, 1951. We have the Afroseas Bank also in that same year, and the Onward Bank, 1951 also. But much radically and more profound was the establishment of the Central Bank of Nigeria in 1951. The CBN, Central Bank of Nigeria, was also created in 1951. By 1952, the Provincial Bank of Nigeria had been established. Provincial Bank of Nigeria. Others included Metropolitan Bank of Nigeria in 1952, and we have the Union Bank of Africa in 1952 also was established. The United Commercial Credit Bank was established in 1952. We have the Cosmopolitan Credit Bank in 1952, and we have the we have the Group Credit Bank 1952. Okay, all right. In that same 1952, the Industrial Bank of Nigeria was established. The West African Bank was established also in 1952. The Muslim Bank came on board in 1958, and by 1959, you have the Bank of Lagos. No, that was just a year before the independence. The Bank of Lagos. All right. Although, all right, these were quite a lot of initiatives, required a lot of initiatives and innovation. Many of these indigenous banks that were rapidly developed from 1950s to 1960 would disappear as by the post-colonial period, all right, because of several debilitating factors. All right, so myriad of this indigenous bank liquidated within the first decade of their existence due to a number of reasons. Of course, the first is the mismanagement, all right, mismanagement of resources, which is something that's emblematic of collective Nigerian identity. I don't know, all right, the mismanagement. Look at recently the tussle between some elites, all right, prominent elite. I don't want to mention their names, leading to court litigations about so many commercial banks, elites, who obtain bank loans from the government, all right, and they would take loans and they wouldn't be able to pay, and the government will have to come to their rescue. This has been a recurring decima, in Nigerian business circle, or since the post-colonial period. There is also the lack of technological expertise. Lack of technological expertise affected many of these indigenous banks that developed from 1950s and 1960s, because this was a period where education, especially tertiary education, that would provide the manpower, the technical know-how for managerial and administrative functioning of this bank. All of these were lacking. There is also the accounting incompetence, all right, of some of these banks. Most of them lack accounting. So of course by 1950s there weren't so many accountants or chartered or ordinary accountants in Nigeria. This was still the formative, the embryonic stage financial education or in Lagos. Basically, there's also the non-cooperative attitudes of the British colonial banks, especially the denigration of these banks by colonial authorities. They probably undermine some of these indigenous banks, and some of the policies of the colonial government favored the colonial banks, colonial governments, banks and institutions, and it served the interests of many traders and conservative elites in the colonial period. So, but there were also the problem of stringent policy. That's the point I'm trying to make. The stringent policies and regulations mounted on the indigenous banks by the colonial government in order to reduce the threats they pose to the European financial institutions in Nigeria, especially the Bank of West Africa and the Barclays banks. All right, there is an incontestable example. Hello, are you still with me?
Yes, sir.
So an incontestable example of this hostile colonial policies against this bank was captured by a prominent scholar, Uche Chibuke, who demonstrated that the series of enactment and policies, ordinances introduced by the colonial government were geared towards crippling this indigenous bank. All right, which gave the indigenous banks only, so for instance, the 1952 banking ordinance gave the indigenous banks only 3 years to meet with the rapacious conditions of the ordinance or face liquidation. And because of that, many of the banks couldn't meet their capitalization target, all right, and they will have to liquidate. All right, the 1952 ordinance act also affected the survival of indigenous bank, and even many customers and depositors lost their funds, and majority of people in Lagos were discouraged to patronize these unviable and unlicensed financial institutions, and it actually led to a decline in the activities and the functioning of indigenous banks in Lagos. The collapse of these indigenous banks, all right, also was due to lack of access to external funding. External funding, they could not raise money to capitalization fund to run the bank. And I've spoke about the lack of experience, lack of knowledge, transfer, and the economic climate of the period also paved way for the growth of European financial institutions, and the decline of the indigenous financial institution. But more importantly and more profound, is that colonial policies affected the everyday functioning of indigenous banks because of the competition they pose to the European banks. Of course, realizing that local populations were reluctant to use the colonial currencies as the denominations, all right, the colonial government will have to make sure that people conformed, all right, that these indigenous banks do not grow such that they become a threat to colonial policies of British sterlings and pounds, all right, as means of transaction. And this was in fact prominent in different parts of Lagos. In fact, many people in colonial Lagos maintained the usage of the commodity currencies until 1940s, and many individuals also maintained their traditional forms of savings, all right, in a way to frustrate, not to conform with colonial policies, that they will not patronize the European banks and institutions. So many people still maintain the usage of commodity currencies until the 1940s, and why some even still use their local cowries and all to the period. So they did not see the need to be part of the modern financial infrastructure. In effect, many of these domestic banks set up in Nigeria with most probably Nigerian investments and funding went bankrupt by 1960. All right, so the business initiatives, the innovations didn't survive beyond the colonial period. By 1960s, many of them had actually liquidated. They've become so bankrupt that it was only the banks, the structures led by the colonial government that were in place by the 1960s when independence was attained. So one of these banks was the National Provincial Banks Limited, which went into liquidation also, or the most prominent. There's a Standard Chartered Bank of Nigeria, which was also one of the main creditors and claimants who reclaimed the unpaid debt and all of that. So the failure of the indigenous banks did not damage the position of Lagos. However, as a financial center, all right, it gave impetus for the growth of modern banking system, and this explains why today Lagos is still the epicenter, it's still the center of gravity in terms of financial services, financial institutions. All right, so it must the collapse of indigenous banking in Lagos must have been as a result of managerial and technological know-how from the colonial period. And this is quite an interesting topic that will require further readings from the students. I expect you to read the works of Uche Chibuke, for instance, which will give you a broader understanding. Uche Chibuke had written extensively about the banking system. There's also the works of Bamidele Ali, all right, and even Anthony Hopkins. The work will give you a broader understanding on the historical trajectory of banking and financial system in Lagos up to 1960. So if you have any question, you can pose your question so that we can have a more robust discussion in the remainder of our time. Thank you.